in a minute. But we are multifamilymasters.com. This is Multifamily Masters Live. What is Multifamily Masters Live? We used to do it twice a month. We got it down to once a month right now. We're here to provide as much content as possible, as much value to you as possible. Commercial real estate is all about your network. This is a team sport. So tonight we're going to talk about the ins, the outs, the ups, the downs, the good things and the bad things. We're going to be real with you about ground up development, about construction. We are multifamilymasters.com. We have 70 plus meetups across the globe. I saw Eddie Wong on here a little bit ago. He runs our Hong Kong chapter. We have chapters all across the world. We have a ton of chapters here in the US. It's all about networking. It's all about putting you on a pedestal so that you become that local professional. It's a lot easier to raise capital. It's a lot easier to network. It's a lot easier to create opportunity when you throw events such as this. And now the US is starting to open up a little bit in terms of COVID, in terms of coronavirus. Maryland opened up this weekend. I went out to a dance club. I had a good time. Long story short, multifamilymasters.com. If this will be recorded, it'll be on YouTube, multifamilymasters.com on YouTube. If you are not a member of our Facebook group, hit the search at the top of Facebook, search multifamilymasters.com, search for our group. Tons of value, tons of content, almost 7,000 members in there. Feel free to ask questions, feel free to network, feel free to create opportunities, build out your teams and do big things together. And we have a mastermind. What is our mastermind? It is not free, number one. Number two, it's all about networking. It's all about surrounding yourself with awesome people. It's all about learning, sharing, networking, and growing together. We want you to know this business inside and out because we want to hold you accountable. Why do we want to hold you accountable? Because we want you closing deals. Why do we want you closing deals? Because plain and simple, we want to partner with you. Myself, my two business partners, Mr. Faris Musa, Mr. Powell Chee, we own, manage, and control 3,000 plus apartments together. We want to get to a lot bigger number than that. Right? So we created this platform. We're in the process of creating the world's largest platform for multifamily cash flowing real estate. Let's rock and roll. This is Multifamily Masters Live. My name is Garrison Gilbert. I'm in Baltimore, Maryland. The three of us combined have 30 plus years of experience. I'm going to hand it off to my two awesome business partners, Mr. Powell Chee, Mr. Faris Musa, for them to do their thing. Let's rock and roll, people.
Awesome. Hey, great. Appreciate that, Garrison. So let's see, I'll just do my intro real quickly here. You know, my name is Powell Chee. I am a multifamily and self-storage investor based in Los Angeles. Live out here in LA, but all of my investments have been out of state. So they've been several different states. So Indianapolis, Dallas, Atlanta, all over, kind of all over the place. So I've been involved in 5 different syndications, general partner on all of them. Also been in properties that I've done either myself or just with a small JV. Most recently, I've closed on a self-storage deal that was closed about 2 months ago, so early January. And very excited about kind of opening up to a new asset class and getting involved in self-storage as well. So in terms of multifamily and multifamily masters, was able to start this group I would say it's been about a little over 3 years now that we started this group. Started as a small group in LA, just about 8 of us that were sitting around a hotel lobby. And then pretty quickly after that, started rolling and growing and opened up many new chapters. We're super excited about all the chapters that we have. I believe we have somewhere close to 50-ish chapters, all, like we said, all around the world. Well, mostly all around the US, one that we have international. And we're also just so that people know too, we've always been geographic based as far as like we have a location in LA, we have one in Austin, we have one in Houston, we have one in Baltimore, all geographic based. However, because of the virtual world we live in, we're now able to do it more on an interest-based level. So if any of you have more of an interest base, so if you're more of like, hey, I would like to do a millennial one, where it's just millennials inside of a chapter, right? And it could be millennials from anywhere, or maybe it's a women's group, or maybe it's some other type of interest. If you have those types of interests, let us know. We would be happy to talk to you about opening up a chapter and helping you grow that. So That said, I'll pass it on to Ferris.
All right. Thank you, Powell and Garrison. You guys do all the hard work. So for those that don't know me, my name is Ferris. I have a company called Disrupt Equity. We are vertically integrated and have properties throughout Texas and Atlanta. And if you don't know me, well, I want to get to know you. So please reach out to me. I'll keep mine short and brief. It's not about me. We're excited about our speakers today, though, because I think, we all talk about really the value add strategy, right? My company, most of the stuff we're buying is 70s, 80s, 90s assets and, essentially doing some sort of value add to them where we are injecting capital, making improvements, usually interior upgrades, deferring maintenance, taking care of deferred maintenance and, creating a better environment for people to live in. Well, I think, right now with the market and what's going on, right, things are starting to get very expensive. For those of you that know me, I'm starting to say I'm getting priced out of Atlanta, right? I can't, we have a whole portfolio in Atlanta and I'm starting to see prices that just don't make sense for me. And so really what's the next venture, right? Well, really, I think in a lot of markets, right, development starts to make a lot more sense, right? And so I know that's an area a lot of people are very interested in. We don't really talk about it enough. And I thought basically who better to bring on than basically, a developer and a friend and a construction, a person that represents a whole construction company. And really we can talk about the nuances of that dynamic between the two and, what each of them are seeing in their respective markets. And so, with that said, we have two awesome speakers, Matt and Hachem, and, excited to have them both on board. And I guess I figured, Matt, maybe you want to go first. You want to give just a 1-minute introduction on who you are, what markets you're in, and kind of what the types of deals you're looking to do. And then Hachem, that's going to set you up for the next question because you're basically going to get the same question. So I'll make it easy for you next.
Great. No, thanks, Ferris. Great to be here, guys. It's really exciting. And I like the vibe that Garrison, you put out already with everyone. It's pretty awesome. Junction Properties is my company. We started in 2014. And as a result of our work since then, we have we've completed 2 properties, 175 units in total in Oakland. And we serve Class A high income residents. The average rent is about $3,300 per unit in Oakland. And our projects are within walking distance to mass transportation, jobs, restaurants, coffee shops. About half the residents have cars. We have currently received entitlements on our next project for 225 units. We're kind of in the opposite world that you are in, Ferris, where our market is pretty much, pretty just low right now. Rents are completely depressed from where they were. Bay Area is the last to recover from COVID-19, and we're first starting to see the thaw. But we expect rents to climb pretty quickly, and we are already talking to property owners on our next projects for the next development cycle.
Thank you, Matt. And just to kind of recap that for people, right? So out of California, a place basically everyone says there's no money to be made. And so I think it's gonna be interesting kind of hear, really more of that, right? What you look for, how do you make money in California, right? A tenant friendly market. And I mean, like you said, your average rent's $3,300. The average rent on our portfolio is about $1,000, right? So very different kinds of deals. So I think it'll be interesting to hear that. Hachem, you want to go next?
Hi, everyone. My name is Hachem, and it seems like you have a really nice, energetic group here. Everyone here has like a good, nice energy, and I'm very happy to be part of this tonight. Again, my name is Hachem Domloj. I'm the owner of CIVE. CIVE is a design build firm. We've been in business since 2003, almost 17, 18 years now. We do full design services and construction. We are a bunch of engineers and architects, and we enjoy doing what we do. So we got involved into the construction industry also as well, like over 10 years ago, and we became a full design build company. We specialize in value engineering. So we want to make sure the dollar that you're spending on your investments is really worth it. We've been doing multifamily now for, I believe, like 4 years or 3.5 years, something like this. In a moment, we have almost 590 units in the process between design and construction. This is like 5 projects in total. I love multifamily. It's really challenging, and then we made it our game. And I love everything about it. It's really fun to build. I wish and I look forward to see every single one of you building new projects rather than just acquiring ready built. I don't know right now with the market prices, with material prices going up. I don't know if that makes sense at this time, but anyway. And that's it. And I'm here to answer any questions that you have, and let's have a fun with this discussion.
All right. And one important question: what markets is your company in?
In Texas.
So throughout Texas. Yeah. So I met actually Hachem through some friends, and he taught me a term that I didn't know: value engineering. Right. It's really the art of engineering a property in a way to reduce costs. Right. Really building that affordable product that's kind of missing, especially in a market like Houston, which is where Hachem and I are both based, actually. So, definitely excited to have him on. And just to recap, right, he really focuses on that kind of ground up piece. Right. So kind of between Matt and Hachem, right, you get a property, right? So kind of two ends of the spectrum. And so I think really that's the conversation that we're going to go down. And so really briefly, I want to ask you both the same question, which is, what is the role of the developer? What is the role of the construction guy, right? And where does that marriage happen? Right. That's maybe, I think, the first question. I think a lot of people don't really understand the developer, don't understand the construction guy, right? And so I think kind of getting that clarity. And Hachem, I'm going to go the other way around. So you want to answer that first, and kind of where do you see your role stopping and the developer's role starting?
Well, the developer role starts first, and then basically we pick it up from there. The developer role is to identify the market, whereas there's a need, or where do they see like an opportunity to develop a multifamily project. And then once they identify, let's say, that piece of property or piece of land, this is where we come in and we help with the planning part of it, the coordination with permitting officials, the designing all the construction drawings, from architectural to mechanical, electrical, plumbing, structural, and all the engineering aspects, and get the permit from the city, and then start the construction, and then basically a turnkey back to the developer, and then our role stops, and then the developer basically picks it up from there.
All right. And Matt, anything to add to that?
I'm smiling. I would say everything Hachem said is correct, except it takes much longer than the 30 seconds he described it in.
Oh, absolutely. Absolutely. I tried to make it as simple as possible. But,
he stuck to the I said 30 seconds, so he did it just right. So
yeah, through that process, like every little point I pointed out there is basically the whole process by itself.
Yeah, it's always a process of hurry up and pause, hurry up and pause. As I'll talk about the development side. So as a developer, I typically have a vision of a property that, in our business model, it's in a high walkability area. It's close to jobs. It's close to culture. It's typically an urban centered project. And so mostly urban projects already are built out, so they end up being infill projects. And that usually requires a bit of creativity, and many times it involves multiple property owners and trying to assemble properties. It's easier to talk through example. So, when I looked at my first deal, it was a 4-minute walk from a BART station, which is our mass transit subway. And we ended up moving 2 Victorian style houses, lifting them and moving them, and rebuilt the foundation for the property owner that owned those 2 houses, and then bought the land under those 2 houses to assemble our project and build a 78-unit, 5-story multifamily building. You don't typically have to move buildings to create infill projects, but you do have to get creative in urban projects.
So maybe to kind of recap a little bit, right, for both of you, right? Essentially, the developer is the one putting the deal together, figuring out maybe that initial vision, and the construction person, the one that's making that vision reality, right? From getting the material ordered to getting the engineering, pieces done, the architecture, and getting all of the different vendors out there and starting to execute, right? So,
I've actually got one great line to describe development and construction. Development is offense and construction is defense. So in development, our job is to create value in the land. And then through construction, we want to keep the project on budget and on time to preserve the value that was created. Once the project goes off schedule, that value is lost.
All right, Hachem, don't write that down. All right.
No, but
Hachem,
actually,
use that in a week or two. You got to tell Matt. All right.
yeah, I want to add one thing to like what Matt said. Actually, the way we work here is we both, like us and the developer, we are on the offense team. With our value engineering, what we try to do is to basically design something that gives value to the developers and make sure that increases the return on their investment. So I feel like we are more like partners with the developers rather than just being on the other side. I understand, yes, time is of the essence because time is money. We all know that. And then we know that there's a lot of problems sometimes. They go like going through the projects, whether with the unforeseen conditions or whatever comes up during construction. That may slow the process. Let's say, for example, the pandemic that happened last year and then the lockdown, that was like a big hit to everybody. I know the construction business was like we didn't have to do the lockdown, but guess what? All the factories for materials, all the suppliers, a lot of people, they were like closed down or they had shortage. So we got hit big time. So stuff like that may affect the projects, but we always try to be on the same team and partner up with the developers, try to come up with something that is of a good value for them. And this is where the value engineering that you just mentioned comes in.
Got it. All right. Well, I'm going to ask one quick question, then I'm going to shift gears into actually more of the development process. But maybe the question is, and Matt, I'm going to start with you. What is one big mistake you see construction guys make in Hashem's field that you would, if someone wants to go be a construction guy, what is one big kind of point of feedback that you would have for them, and vice versa? Hash, I want to ask you the same thing, right? The biggest friction point or problem that you see with a developer. So Matt, you first.
I
just put these guys on the spot, so I did not give them that question beforehand. So let's see what they say.
I'm coming off, a couple of projects, and we had two projects, two different contractors, and one contractor had different levels of supervision, and it resulted in a higher construction fee. But having more eyeballs on the project resulted in a much smoother operation. The other project had a smaller fee, less eyeballs on it, and there were some more problems as a result of that. So I learned that paying a little bit of a higher fee for more eyeballs on a project is really helpful. I also felt that the culture on the job site is really important, and the project that had a better culture, essentially happier laborers on the site, resulted in very little turnover on the site, and the project that had more people complaining on the site resulted in higher turnover. So that's what I've learned from my experience in construction.
So more eyeballs and better culture, right? It's takeaway there. All right, Hachem.
Well, this is from experience on previous projects. Some developers, they tend not to go into details of the plans during the planning and in the design phase. And then we had some issues when we started construction that the developer was like not aware of very important things in the project that, oh, I didn't know that this is going to be like that. So basically, this is the issue that we have faced, and there should be more involvement, and this is what we try to always do and explain to developers that this is their involvement into the design phase makes everything smoother during construction, and then educate them on the level of details. This is what's going on in the units, this is what you have there, this is what you have here. So basically during the construction, no surprises, and then we try to minimize the change orders as possible. I saw somebody here said, Camille Zook said, when you asked Matt that question, they said change orders. Yes, I hate change orders because I don't like to sit down and argue with the developer on any change order. I mean, if it's not on the plans, it's not on the plans and somebody has to pay for it. But if something on the plans, there shouldn't be any change orders. And this is where change orders come from.
I have one addition to that. In our projects, we get our construction manager involved at the conceptual stage. And then during the design development stage, we typically have a contractor on a pre-construction agreement. And they're involved in the architecture meetings every period, every few months, just to check in on the plans and offer their advice. So we try to get construction involved in the design very early on. And that's probably helped, prevent a lot of change orders in the projects.
Got it. Okay, cool. So shifting gears a little bit, right? And so this is a question that I think where at least I struggle, a lot of people struggle, which, let's talk about land, right? So my question is kind of two parts, and I'm gonna start with you, Matt. First question is, what do you look for in land? And specifically for you, Matt, being the developer side, what things do you look for to mitigate risk, right? In terms of actually taking a project from imagination to reality, right? Specifically around the land, getting it under contract, what it needs to have or not have, and what the contract needs to have or not have as well, right? So that's kind of the question for you. And then Hachem, similarly, it's going to be kind of the construction side of that question.
So just concept of land. Any site that I look at, all I'm doing is trying to change the current existing allowed or legal use or I'm developing it into a use that is much more robust, which would result in a higher residual land value. So it starts with that, really understanding land use laws and what is out there that will enable me to add much more density in a multifamily project. If based on my projections and returns of what I can do, if the residual value of the land is substantially higher, then it looks like a deal that I want to pursue. And then from there, make an offer, try to get into contract. And a contract for me is essentially an option, because I'm always looking to going to a long-term contract period where I will only close after receipt of the entitlements past the appeals period for that municipality.
And for those who don't know, what does entitlements mean actually?
Entitlements is a fancy word that means every city agency or municipal agency that's involved in oversight of that property has approved the plans to build what you have proposed in your project application.
So essentially it boils down to just a long close while you're doing all your homework up front, right? And, and on that same note, I guess, how much money do you typically, essentially put up hard, right? Working through that, right? In terms of cost. So to get to the point where you close, right, you're confident that it's going to happen because you've kind of cleared all the big hurdles. How much money are most people talking about, and on that same point, I mean, what size projects are you talking about too, that kind of go hand in hand a little bit, right?
Sure. So I'm currently in contract on a property that we have already entitled. It'll be 225 units. The project we are budgeting will have a total development cost of $120 million. The land is about 10% of the project budget. And we have, let's see, we started off with a 5% deposit for the property. And we have extended it due to COVID and put down an additional deposit, which is more like 10% of the land cost. And we are in contract through April 2022 on this.
So I mean, as a land guy, I mean, you're holding on to this thing for 3 years. Huh? It sounds like, right? You started pre-COVID and you basically have through April. So that's a long process. Hashim will tell you how we do it here in Houston, Texas. All right, we'll get there in a second. And I was going to add, and that 5-10% is hard money, right? Non-refundable, or is it refundable?
It is not non-refundable.
Non-refundable. And then the other question is, outside of deposits, what other costs do you have right around architecture, evaluation, all of that? I mean, how much are you typically spending before you get to that finish line?
Sure. For this project, we've spent about $500,000 on all the costs for architecture, engineering, various legal costs, land use, attorneys, transaction attorneys, civil engineering, dry utility engineering, landscape design, some structural design. So we have a market report. We have our property management review of the deal, which we always have very early on to make sure we're designing and developing a project that our property manager would operate efficiently as an institutional operated property. Those are probably just a few of the costs, but
so you may get to the point, hopefully not, right? But you're 5-10% into it and $500,000 of just hard costs, right? And then someone somewhere decides, you know what, we don't want to allow this thing kind of happening, right? So there's definitely risk in the business, which is why kind of the fruits are obviously as rewarding. But that's it for those of you that didn't hear, right? It sounds like, Matt, your cost is really, $500,000 a unit, right? Totally other end of the spectrum. You can't even find a property in Houston to buy for $500,000 a unit, right? So, it's interesting just to see the big difference between, markets.
It's nuts here. All right. It's the Bay Area is a boom and bust market. It's because there's so much wealth generated here from technology, and all that money goes somewhere. And a lot of people just buy real estate, and rents are really high because tech workers are paid really well.
No, a totally different market. And there's as I've gained more experience, you start to realize there's usually a reason why things are the way they are, no matter what it is. So awesome. Well, thank you. I think that was definitely insightful. So Hachem, kind of same thing, right? What are the, from your perspective, right? What are the things you look for? And again, Texas is a whole different animal than California, right? I mean, we can build an apartment in 10 days kind of thing if you had enough manpower, right? But what are the things that you think someone should be aware of for the land, right? And I know Matt talked about kind of dragging out the contract. Obviously, it's in everybody's interest to kind of have that, that time frame to really do your due diligence, right? But I mean, what are the things you look for in land, and what are some of the risks that someone should be aware of, right, if you're developing in Texas?
I mean, from my experience is when we get on early stage on a project working with a developer is to look at the property and see the availability of utilities. And this is the main thing right here in Texas. Sometimes if you're not within the city's jurisdiction, you are basically within a MUD district, which MUD is a municipal utility district. It's a private utility, some kind of like semi-private utility district. So we look to see if they have availability to serve the property from a utility standpoint, water and sewer. This is the main thing. Like sometimes I've seen a lot of projects, they've been shut down just because of no availabilities for utilities. Or the cost to bring utilities to this particular property is really high and it's not justified. These are the type of, or like the challenges that sometimes that we see like the developers face at the very early stage. And then at that time, the project is basically killed, or if you get the answers that you want and everything is and balanced, then you move forward with the project.
And most of the projects that come your way, do those people have it under contract, kind of more like Matt's case, or do you see cases where people basically go all in, they buy the thing and they come to you and you're like, hey man, this is just not gonna work out?
No. Usually they're just under contract. They have their, here in Texas, you put the property under contract, you have your 30 days visibility period, and then I don't know, 3 months after that to close. Sometimes I've seen people I've worked with the client where we got the permit and then he closed on the property. So it depends in here on the deal between the buyer and the seller. But usually you have your 30-day feasibility period, and this is when we get involved and try to see how many units we can put on that property, if you have the utilities available, and make like the schematic site plan to see if we can meet all the code, local code requirements and the local standards. And then we go from there and see, okay, this is a good project or not.
Got it. So kind of time frame wise, right? Matt's talking about 3 years. You're talking about 30 days plus 3 months ish is kind of maybe typical what you're saying.
Yes, yes.
Awesome. Okay, cool. And then let's talk about cost, right? I think Matt, we kind of hinted a little bit at just what it costs to build in your market. We want to maybe recap that a little bit in terms of, what the spectrum is on the development side, right? Obviously, maybe you're targeting in the higher end, what does typical build costs look like for you? And maybe for people, let's keep it per square foot to kind of keep it simple. And then Hachem, similar for you, right? All in, what are costs look like in Texas, right? So Matt, you want to go first?
Sure. It's, well, the market's pretty volatile right now, especially with lumber. So it's hard to say, but I can tell you, we are currently underwriting on hard costs, about $300 per gross square foot for a building that would be 5 stories of stick over 2 stories of concrete. It comes out to about $410 per square foot for the rentable square feet. So for all the livable area in the units. All in for the land, soft costs and hard costs, our current underwriting budget for our next deal is $650 per square foot for the rentable square feet. It's about $466 per gross square foot.
You're going to have to, I'm going to make a trip out to San Francisco soon. You're going to have to take me out and show me, man, how you, where all this money goes in these units, man. Is it gold plated toilets or what?
It is not. I have seen much higher end finishes in Atlanta and other markets during my career. We're talking vinyl plank flooring, thermofoil cabinets. We're talking quartz countertops. We're talking on our last 2 projects, we did the surrounds in the showers. It was not tile. Vinyl windows.
I need to go to the Bay Area and start building there.
You're gonna have to bring, an army of people with you, man. It's labor. I mean, everything adds up there. So you might as well bring a force with you too to kind of keep costs down.
Figure it out, Hachem. You'll have the whole market.
I bet labor costs there is very expensive as well, because cost of living for these laborers is very high as well.
Labor, yeah. So I'll give you an idea. Laborers typically have to drive about an hour and a half plus each way to a job site. With our lumber sub or framing sub in our last project, we worked out a deal where they would work 10-hour shifts Monday through Thursday, stay in a hotel like a sports team, share hotel rooms, and then go back early on Friday. Because the time to drive back and forth in traffic was just not reasonable.
Wow.
Yeah, so maybe Hachem, same question, right? What does development look like? And I'm actually, to make this kind of interesting, right? Let's say you're doing a similar finish as what Matt said here in let's just pick Houston. What can people expect?
Actually, this is what we're doing here, but I mean, you want me to answer how much the cost is before your question or after your question? Because the market is changing right now. It's crazy.
Oh, you mean 5 minutes ago versus
every second the price is changing.
Rough cost. Give me plus or minus 20%. All right.
No. Anyway, what we're basically doing is vinyl plank. Most of the apartment complexes, vinyl plank finishes, quartz, same finishes that Matt was talking about. But the cost here to build those are like around $110 a square foot of rentable square foot area.
And are you pricing in the fact that it's 2 stories of concrete, 5 stories of stick as well, Hashim, or are you just looking at kind of 3-story, garden style?
Talking about, we're talking about garden style. Basically, you have concrete foundation and 3 stories on top of that. When you go to podium style, if you do concrete and then let's say 4 or 5 stories, which is the max allowed by code to do stick framing on top of the concrete, we're talking about like between $145 to $160 per square foot, depending on the finishes.
A similar product, about a fourth, a third of the cost. About a fourth. So interesting. Awesome. Okay, cool. Well, let's shift gears a little bit more, right?
Yeah, one thing that right now, somebody asked a question here and say, what are we doing right now with the price increases in the lumber? This is a very good question. I mean, if the market stays like that, I guess a lot of projects are going to be put on hold, because it's not going to, let's say if I come and tell you you have to spend $2 million on an 88 unit development, you're going to say, okay, this is not going to be worth it to move forward with that development with this kind of price increase. So that's going to put pressure, I believe, on the let's say the lumber market. It's going to stabilize. It's going to go down, in my opinion, and it's going to stabilize at a certain point. I believe from now till June, prices are going to adjust. And then we've been in contact with people in the Congress and in the Senate. We had a conference call last week with a senator from New Hampshire, and she's helping us big time on this issue, because it cannot stay like that. It has to come to a stop, and then the price has to adjust and to stabilize as well.
Got it. So if anyone has a forest, you're interested, right? So
absolutely, yeah. This is more than gold right now. If you have a forest, this is more than gold.
Awesome. Cool. Well, so for those that are tuning in, right, if you have questions, go ahead and ask them, right? We're going to shift to the Q&A soon in 5 minutes, but I wanted to ask Hashim and Matt kind of one question, right? Which is, what's the hardest part of your business, right? The thing that kind of stresses you out the most, and, for others just to kind of be aware of.
Currently, as a developer, I'm judged based on completing a project on time and on budget, and then the rest is market risk, which is shared with investor. And thankfully we were successful in both of our projects, even though the rents are substantially lower than our underwriting, but we did deliver before COVID, so I got lucky there. I would say the toughest part in developing right now, knowing that there is a macro need for housing in the Bay Area, is finding a site that actually pencils. And because rents are substantially lower than they need to be to make a deal financeable, it's a difficult place to be. So we're really exploring alternative technologies, where there's a lot of construction technologies and innovations where you can build a lot off-site, from completely modular building off-site to panelization and other parts of a building that can be built off-site. Our focus right now, it's really hard to lower the cost of construction right now, but we're finding opportunities to reduce schedule significantly, which helps reduce all the carry costs that come along with construction. We're looking at, we're working with a company called Prescient out of Charlotte, North Carolina. Instead of doing the 5/3 product that is typical, we're looking at a light gauge steel superstructure that would, right now, based on what we're seeing, may come out to the same cost, but it might save 3 or 4 months off schedule, which will be significant and will definitely help the projected internal rate of return. And then we're seeing a lot of technologies where like CLT would be similar, and mass timber, where pricing might be similar, but schedule will be completely, or not completely, significantly shaved off. That would also help the internal rate of return, which is what, all institutional investors look at when joint venturing in a project. So to answer your question, getting the yield to a point where it's financeable is our biggest challenge, and finding opportunities in innovation in the marketplace to help us get there.
It's a very different kind of value engineering, right?
Yeah, actually, this is very similar to what we do in Mata, because right here in front of me on my notebook, I have Prescient, that's the company name, metal framing, and then this is something that we're looking into in lieu of using timber construction. We're looking into LGS. We're still the light gauge steel. It's still in a phase of like we're studying it, and then we're comparing the prices. But when you said it's almost the same price as timber construction, is it like the price that we all know, or the price that is basically way inflated when you did that research?
Well, I'm comparing it to the costs here locally, including labor.
Okay.
And so we're comparing it to our costs that we got from our contractor here. And, but if you haven't spoken to them yet, you'll definitely learn a lot. They've got a pretty dialed in system, and they've seemed to have solved a lot of the traditional problems with light gauge steel over the past, say, 15, 20 years. But we're really focused on reducing schedule significantly, which will help make deals pencil.
Mm-hmm. Because this is we have a project right now, and then contract is signed, and then if we go with the lumber prices that in the current market right now, the project is not feasible. So we're looking, a part of what we do is the value engineering and basically being creative and innovative, and see what can we do different and what can we do better to serve our developers, to make sure that the project is beneficial for them and increase their ROI. So we kind of like always think out of the box, and we look for the best way to build this project. It doesn't have to be all the time timber. So I'm looking like really into prefabricated wall panels, prefabricated metal trusses, so we can use, and in that, from an architectural standpoint, that changed the type of construction, because now when you go to the code, it's basically you have type of construction, let's say type 3, or type 5, and basically what we're dealing with here, which is dealing with combustible material or non-combustible material. When you're building with non-combustible material, the entire code changes, and it's less stringent than basically when you're building with wood. So and then this is something we're still studying. If you spend a little more money, or maybe the same price as the inflated prices of timber, but there is some savings in other aspects of this construction, because you don't have to do as much as you used to do for, let's say, firewall separations and other aspects of the project itself. So you can save money in one area, and then maybe spend a little money on the LGS system, or the light gauge steel system.
So we should all sell our Bitcoin and buy stocks in LGS companies, right? So, so the same question for you, Has. So that was definitely interesting, but same question about that, right? What is the hardest thing in your business, right? And maybe it is, the thing that kind of you just got the most excited about, right? Which is fundamentally solving challenges in the market that not really in your control, right? But you kind of have some of the tools to really figure out solutions.
Yeah, I mean, we've known each other for a while now, Ferris, and then the type of clients that I deal with. We come in at the very beginning, or the front end of the project, because we're a design build firm. So the clients approach us, and then we know what their budget and where they need to be at. And this is by itself as a challenge. It's not like, oh yeah, well, they want to be at 1 million, we can do this for $500,000. Oh, we pocket $500,000. That's not how we do business. All our clients we've been working with for many years, and then they come to us for multiple projects because they see the value of work that basically we do. And then every project's a challenge by itself. It's like, okay, how are you going to make the numbers work for my developer, for my client? How are you going to build this project, or what is the best finishes that is fit for this project? And so it's not only on the finishers, it's the type of construction, the let's say the land is small, and then we have to make it work. We have to fit, let's say, 150 units or 200 units. So go with an underground detention pond, for example. And I don't know if the others are familiar with what is a detention pond here in Texas, or if when it rains, we have to detain all that water in some kind of retention system and then slowly let it go into the city public storm sewer. So, and this is a big cost in all developments here. So we try and see, okay, which one is more feasible to do, and above ground detention pond and lose some of the land, or do it underground. Like I just said right now, the type of construction, are we gonna go with metal, we go concrete, or we go with wood construction? So these kind of things, yes, we find it very challenging. And also what people don't understand as general contractors is it's not a piece of cake to build 200 units and then deal with so many contractors, subcontractors on site, and then try to bring all these people from different mentalities or different disciplines to work together in harmony. This is challenging. And it takes like Matt said at the beginning, a lot of supervision, Ion, and create that culture on site that everybody's working together for the benefit of that project. It's a big thing, and it's a challenge.
Awesome. Thank you guys very much. Well, so that said, so if people have questions, we want to go ahead and shift to Q&A, where we'll do about 10 minutes Q&A. And then we'll basically do breakout rooms, right? For those of you that don't know, we always do breakout rooms. Networking, like Garrison said, is probably one of the biggest ways to kind of grow in the business, and break the audience up into groups of about 5 to 8 people and get to know somebody, right? Maybe you'll get lucky, Hachem will stick around, you get to talk to him, or same for Matt, right? So we'll do that here in about 10 minutes. But that's it. If you have questions, go ahead and drop them into the thing, and we will kind of ask them.
Real quick, Ferris, let me interrupt. That's okay. Multifamilymasters.com. If you're not a member of our Facebook group, get on Facebook, hit the search link at the top, multifamilymasters.com. Join our Facebook group, approximately 7,000 members. And we are multifamilymasters.com. If you're interested in hosting a meetup chapter, we would love to talk to you. Powell talked about that a little bit on the onset of tonight. And if you're looking to learn, share, network, and grow in the commercial multifamily cash flowing real estate sector, we have a mastermind we would love to talk to you about. Feel free to email gg@multifamilymasters.com. Once again, that's gg@multifamilymasters.com. Our mastermind is all about helping you learn, share, network, and grow this business, because we want to hold you accountable, because we want you closing deals, because we want to partner with you, plain and simple. This is a team sport. Let's rock and roll. This is Multifamily Masters Live. We do this once a month, every month. Let's go.
All righty. So let's see. So let's go to the first easy question. Actually, I'm going to ask you guys an easier question really quickly. And how can someone get a hold of you? So people are asking how to get a hold of both of you. Guys are popular. And then also, can you type your email or phone number, contact information in the chat, whatever you're comfortable giving out. But Matt, you want to go first?
How to get a hold of me?
Yeah.
Oh, I will. I'm going to post my phone number and email.
Ooh, that's gutsy.
That's gutsy. I'm accessible. No, I'm happy to serve the community and share what I know.
All righty. And then Hachem.
I'm typing my email here as we speak, and basically my phone number. I'll be more than happy to take any question or
type in your emails, and maybe they're the link to your company web pages. But so
sure.
All right. So that's how you can get a hold of these guys. Next question is, what comes first, the contract or the entitlements? Maybe that's a question more for you, Matt.
The contract comes first. The way it works, we always do our analysis to solve for residual land value, make an offer, try to get into contract. We try to get a long due diligence period, typically between 30 and 90 days. We try to get 90 days as possible. We can do it in 30 days if we have like a geotech who doesn't have permit issues, but we always do a geotech study. And if we can't get a drilling permit, then we have to extend due diligence. But we can typically get everything done in 30 days. If everything, that we need from our consultants gets to us in time, but we're really reliant on consultants. So we explain that to a seller when we kind of work out an extension if they, just can't go beyond 30 days.
All right.
But contract and then due diligence. And then once due diligence passes, you put down your hard money deposit, and then you go in for your entitlements. And if it's the Bay Area, you should expect a year. If it's San Francisco, you should expect 2 years.
Fun times. All right, next question is for you, Hachem. How do you manage the increase in lumber and building supplies for a current project, right? Are you just having to put the project on pause, or kind of really make the developer make the decision? I mean, kind of what does that look like right now?
Well, right now we are at basically with the projects that we have on hand. We're lucky because we are at the stage that it did not affect us much. We are at the very end of basically finishing out the projects. So the cost did not affect us big time. We procured most of our material in advance. One of the things basically that we always do on our projects is we have a procurement department here just basically to take care of what we need on every project. And then make sure that we procure everything we need before we start the construction. Meaning I sign my contracts with all my subs before I start construction. And then I sign my contracts and lock my prices for most of my material before I start my construction. So that saves me a lot of headache during the construction phase. Material prices going up, going down, it doesn't really concern me. It does affect us sometimes, just a little bit, because the majority of our material prices are already locked.
Awesome. Let's see. So next question. Maybe this is for you, Matt, which is how does underwriting defer development versus existing multifamily property purchase? Where to start? Very high level. Keep it brief, since I know we're running short on time.
Yeah, no, we're buying an existing property with cash flowing. You have cash flow in place already, and you're valuing it based on the cash flow in place. With a development deal, we're valuing the property based on the cash flow that we expect to make once the property is completed and leased up and cash flowing.
Cash is king. All right, let's see. Next question. In California, what specific things are driving the high costs that are keeping developers from building lower end projects? That's a good question.
Labor.
Maybe the answer is everything. So Matt, what do you want to say?
No, I think the big difference between building in Texas and the Bay Area is the labor cost.
All right. Next up, do you guys, I don't know, do you guys do partnership opportunities, I guess? Do y'all JV with others or not? I'll kind of ask you both.
For us, yes, we are reliant on joint ventures. I have a co-GP in my deals, and I have a large institutional partner in my deal as well.
We mainly are basically, like I said, design build and like engineer, architects, and contractors. So it depends on the opportunities. We may JV, but we haven't done so far.
All right. Actually, here's a good question. I was going to ask this earlier and kind of got distracted, which is Matt, for you, how do you get compensated, right? What's a developer fee? What's that structure look like?
Throughout my career, which is now about 18 years, financing and developing multifamily property, the standard fee is 3% of the project budget. And then there's a construction management fee that is 2% of the hard costs.
All right. Let's see. So next question. Either of you have feedback on kind of just HUD developments? Any thoughts, any experience with those?
I have no experience with them.
My experience with it, just my little knowledge is takes a long time to get the deal financed. And then your contractor has to be HUD approved, I believe. And this is a process that you go through with the contractor, I mean, throughout the project, because it's, I guess the certification for the contractor comes with every project. We haven't done any HUD deals, so my knowledge about it is very limited. But we were approached once and I did some little basic research on it, and then this is all I know about it.
All right. And then one last question, and then we will shift to breakouts because I know we're running short on time. I'll be respectful of everyone's time, which is, and this is for you, Hachem. I'm going to read the question, then I'm probably going to rephrase it, which is the question is, how is your contract set up between developer and GC? We set a guaranteed maximum price with a contingency. Any savings, the contingency is split between us, the developers, and the GC 60-40. We find this pushes the GC to go back to the subs and squeeze as much savings as possible. So my question, probably to rephrase it a little bit, Hachem, is that a good structure, and why or why not, right?
We've done that before, but basically, let me explain to you construction. Construction is, it's like, think of a triangle. And then on every corner of that triangle, the first corner, there's time, or let's say call it schedule or time. And then you have money, which is cost. And then you have quality. Anytime that you go towards money, you are going away from time and then from quality. When you go towards quality, you're going to spend more money and more time. So you want to be in the middle of this triangle, this equidistance from all corners, to have a very successful project on time, good quality, and then within budget. So to answer your question, guaranteed maximum, yes. It may, the contractors, they're going to go in and try to squeeze the subcontractors, but when you squeeze your subcontractor too much, you may sometimes put the either quality in jeopardy or the time is going to be in jeopardy. And then this is not the philosophy. When I sign a GMP contract, it's not like I'm going to go back to my subs and try to squeeze them to lower the cost. The GMP contract is basically when I'm going into a contractual agreement with you, and then we don't have the full specifications of the project, or the project is a very early stage to basically give you a detailed breakdown of the cost, an accurate cost. This way, we prefer to go with a GMP and put a contingency on the side, and then yes, we split it 50-50 or 70-30, 60-40, whatever that formula is. But this is where we go, or when we go with the GMP contract. And then yes, we try to be within the budget. If there is any savings, yeah, we are splitting the savings, but it does not mean that we're going to go after every subcontractor and try to squeeze. But this is type of contracts that we go with if we're going into a contractual agreement at the very early stage of design. But when we have a full design package, a full specification package, we go usually with lump sum, because you as a developer, you want to limit or shift the liability to the contractor. You know that, okay, it's going to cost you 10 million it is. It's not going to be 1% more or 1% less. When you go guaranteed maximum price, kind of like that liability, or it's shifted, it's shared between the owner and general contractor. So it's the type of contracts is a science by itself. That I have a master's degree in construction management. So that was a course by itself back in college. It's a science of shifting liabilities between owner and contractor. It's not just squeezing subcontractors. No, I disagree with that.
All right, good last question. So definitely different than the others, but Matt, Hachem, thank you guys very much. Wealth of information, appreciate it. For those of you that want to get a hold of them, their contact information is in the chat. So it is there. If you guys can't find it, reach out to me. Happy to get it, but appreciate it. You guys are welcome to stick around for the breakout. Maybe we'll get to